Finishing higher across the board. Joining me now with how to invest in this current environment are Dennis Wasung, Portfolio Manager at Cabot Money Management. We also have Harry Rady, CEO and Portfolio Manager at Rady Asset Management. Gentlemen, thanks so much for joining me. Dennis, let me start with you. I mean, really an impressive comeback here at the end of the day, plus really hanging on to those gains that we saw on Monday. What do you make of it?
Well, I think the market, we've seen a couple of different periods of digestion over the last couple of weeks, but in general, we're seeing a lot of positive signs here. The market has moved pretty broadly, obviously led by financials, but we haven't seen the big pullback. So I think as you see some of these more macroeconomic data points coming out, durable goods today, we've seen some retail sales and housing data, things are moving a little bit better. We're starting to see some bottoming or at least stabilization in these data points, and I think it's giving people a little more confidence and a little more confirmation in the uptrend in the market.
Harry, I mean, some really impressive signs of strength here. When I watched that rally on Monday, I thought for sure we would be giving it back the rest of the week. You know, we were down today. We came charging back. It seems pretty positive. What do you think?
Well, I've got 3 words for you.
Uh-oh.
Short, short, short. We are as short as we've ever been. We've raised as much cash as we've ever had. This rally is just too much, too fast. And within the indices, there are some, I'm going to call them story stocks, that have performed significantly better than the market, and we think that it's just overdone.
Really?
Yeah.
I mean, what are you short here, and are you afraid of getting crushed?
It's always
Getting
possible.
Nervous?
No, I mean, the risk-reward ratio for these companies are, we believe, are in our favor. Companies like Amazon.com, the fundamentals are good, but the stock is trading at 50 times earnings. AutoZone, growing at 5%, but price to free cash flow of 15 times. Netflix trading at 30 times earnings, facing all sorts of technological challenges. Barnes & Noble, operating margin of 2.8%, trading at 13 times earnings. But most importantly, they have to compete with Amazon. And then there's Palm, which simply has to compete with Research in Motion and Apple. And last but not least is Panera Bread, trading at 23 times earnings. And we're also short long-dated treasuries via the TBT.
Dennis, what do you think about those positions?
Well, I think this is a perfect, I would say sort of a perfect case in point that investors in general right now are terrified. They've been battered and bruised over the last 18 months, and they're getting a lot of data points, positive and negative. They're seeing the market rally. And I think in general, when you sit back from a longer-term perspective, we're in a position right now where we're basically 10-year average or 10-year annual returns right now are negative. And historically, that has pointed toward a forward period of time where the annual returns are positive and attractive. So from our perspective, we think it's time for investors to remove the emotion from the equation, have a plan, put it in place.
What to do? What should you do?
I think you need to sit back and look at your asset allocation, and if you decide or believe that you need longer term a higher allocation to equities, you need to put in place a plan, whether it's dollar cost averaging, looking at specific moves in the market, trying to buy and more consolidation days, a host of strategies. But the important thing is to methodically do it, take out the emotion from the equation. And when you sit back and look 5 years from now, you probably made a pretty good choice in terms of getting into the market.
Harry, what would make you move in and cover those short positions?
Well, the market would have to go down, or one of the things that would make me change my perspective is if mortgage capital was readily available. I think these reduction in mortgage rates are really phantom mortgages. The rates have come down, but mortgages aren't readily available. And until that happens, I'm bearish, bearish, bearish.
All right. Guys, we're going to leave it there. Thanks to both of you for joining us.
Thanks for having me.
Treasury Secretary Tim Geithner raising some